Okay, so let's answer this Power Strategy 2 trade. The chart in question is this one here. Again, we want to identify the trend, we want to identify the way the MAs are going. Now, the MAs sometimes give us a bit more information about what previously may have happened on the chart. For example, with this sideways movement here, you may not know which direction price was going in previously, but we can see that the red MA is above the orange MA, and there is a good distance between it, and therefore prices were probably trending down before that. So we're really looking for short positions here. So see if you can identify the trade. Did you get it? Well, the ABCD is this one here. We've got a decent retracement from the B to C into the A to B. So what we want to do is we want to be taking a short here, but where will we be entering? The entry is at the D point. We are selling when the D point gets hit. What about our stop? Well, there's no point pausing here. You can't see if there is any sort of previous pivot high to the left, but that's precisely what I wanted to portray here, that if there is nothing visible, even if there was price on the left going higher or whatever, but there was no pivot high for some reason, or the pivot high is way too far, then what would you do here? Of course, you're going to place your stop 50% of the C to D leg above the entry. So your stop is going to go a lot higher, obviously off the chart. Now, what about your break-even price? Well, again, it's the one-to-one risk reward. Where exactly is that? Well, you work out 50% of the C to D leg, and that is how much the distance will be between the entry and the stop. And therefore, that many pips in profit going down from the entry is where you would be breaking even. At that price, when that price is hit, you're going to move your stop from wherever it is above down to your entry price. And then what about your exit? I want you to pause the video and thoroughly work out where exactly you would exit. Well, I hope you got this. Your exit price will be as indicated, and you're going to be buying there because it's a short, remember? So let's work it out. After the break-even price, you are going to be looking for pivot highs. So we see our first pivot high is this green one here after this red one forms. So our stop goes down above the top of the green bar there. Then the next pivot high that forms is this red one here. When this red one forms here, you'll know that this is a pivot high, and therefore your stop goes from here down to here above that red high. Then the next pivot high forms. As we go down, we can see there's not much forming until this red one here. When this red finishes, we'll see that this red high is a pivot high, so your stop moves down from here down to here. And then the next pivot high that forms is this blue pivot high, and so your stop goes down from here down to here. After this red bar forms, you'll know that this is a blue pivot high, and so that is where you'll be placing your stop. Then we see that price, without making any more lower pivot highs, we see price actually breaks up above your stop level, and that is where you'll be exiting your trade for a buy. Remember, we went short, so we sold first, then we bought back at a nice profit. Risk reward, what is your risk reward here? So let's work that out. Pause the video and see if you can work it out. Well, let's look at the risk first. What is the risk here? Well, you can't see exactly where the original stop loss is, but you do know it's 50% of the move from C to D. And if we look at that, we can see that that same distance is the distance between the entry and the break-even price. So that's approximately, I'd say just over 3 boxes. And let's look at our reward. Well, if we look at the distance between the entry and the exit, it's around about 14 and a bit boxes. So looking at that, looking at those figures, we're looking at around about a risk reward that's over 4-to-1. So it's a 4-to-1 plus risk reward here. Again, I'm just trying to get you to think in terms of risk and reward and just work it out. It doesn't matter if you're a little off in these examples, that's fine. I just need you to understand that it's the reward you're looking at, it's the risk you're looking at, and you're looking at how many more times the reward is than the risk. Remember, when you're actually working these out in your trades, you're going to have the exact figures. So you're going to just put them into the trading calculator and it'll work out your risk reward for you. But as long as you're understanding the concept behind the risk reward, then that's fine. That's what we're trying to accomplish here. Okay, so I hope you got that right. Let's go on to the next example now. Go over to the next page and I'll see you in the next video.